Hey there, welcome back to my channel. In this video, I'll be reading and explaining parts of a stock quote. So let's get started. So to start, we have the company name, Apple, the ticker symbol, AAPL. Then we have the stock exchange. For Apple, they trade in NASDAQ. And we have the currency, which is US dollars. The bolded number is the closing price for the stock. For Apple, they closed Friday at $353.63. The thing in red is the stock's performance for the day, which is either an increase or a decrease, but today was a steep decrease due to market conditions. We have the previous close, which is Thursday's closing price, and the open, which is Friday's opening price. The prices are not the same because of after-hours trading, in which the stock can still move. The bid is the price you sell a stock at. For Apple, if you wanted to sell 100 shares on Friday, they would sell for $353.64, and if you wanted to buy shares, you would buy them at $353.76. You may have thought you buy and sell at the exact price of the stock, but actually you refer back to the bid and ask while buying and selling. There shouldn't be much of a difference between the exact price and the bid price and ask price. The day's range is what the stock price was at throughout the day, and the 52-week range is the day's range, but for the whole year. So Apple was between $192 and $372 in the last 52 weeks. The volume is how many times a stock is traded during a day, and the average volume is how many times a stock is usually traded in a day. So on Friday, Apple was traded 51 million times, which is 14 million more than the average volume of 37 million a day. The market cap is the value of all the company's shares. So to find the market cap, you take the share price and multiply it by all the shares in the company, which leaves you with the market cap. Apple has a staggering 1.5 trillion as its market cap. Beta is a measure of volatility. The market has a beta of 1, so anything above it is more volatile, and anything underneath it is of course less volatile. The price-to-earnings ratio, also known as the PE ratio, is the ratio of a company's share price to the company's earnings per share. So pretty much the PE ratio is how much you're paying for profits. So for every dollar Apple makes, we are paying 27 bucks for their stock. The earnings per share, or EPS, is calculated as a company's profit divided by the amount of shares of the underlying stock. The final number is an indicator of a company's profitability. And the EPS is how much profit is made per share. So Apple made almost $13 in profits for every share. This is why when looking for a stock, you want to find a lower PE ratio. The earnings date is approximately when a company will release their next earnings report. So somewhere around July 28th and August 3rd is when Apple will release theirs. The forward dividend and yield is how much a company pays in dividends and what their yield percent is. For Apple, they will pay you $3.28 for every share you own. This is a yield of 0.9%. So if you were to own $100 of the stock, you would receive 90 cents, which is on the lower side of dividend payments. The ex-dividend date is the day you need to own the stock to receive the dividend payment. Next we have fair value, which is kind of helpful. I'm pretty sure it takes account the PE ratio and analyzes if a stock is under or overvalued. Next we have the 1-year estimate, which is not correct 99% of the time, so it's not as helpful as other key components. Then we have research articles, patterns that are being recognized, and finally we have a performance outlook, which pretty much guesses how the stock will do over periods of time. Well, that's it for today. I hope you enjoyed the video and learned something new. If you did, make sure to hit the like button. Also, if you want to help the channel, subscribing is the best way. Thanks for watching. I'll see you in the next video.